Hello, everybody, and welcome to today's episode of Trade the Chain. It is August 25th, and I'm joined alongside with Doug, the everyday guy DeRosa. You can see he's very ordinary looking. Nick, our director of research, Mancini, and we're going to break down the charts. We're going to go through some news pieces that have to do with Crypto.com, the South Korean crypto exchange market. Really, I mean, in a down market, this is build mode, and there's a lot of people building and a lot of people advertising that in news pieces. So without further ado, we're going to go to the macro markets and see what's bullish real quick. Let's see here. So if you notice, we put out a morning tweet from Trade the Chain's account, and we highlight what's going on with the most bullish or the hottest on Twitter. And as you can see, right now with the most bullish coins, according to Daily Sentiment, we have Band 96 Score. We have Storage, AKRO, RDN, and Noya. On the other side, we have Keep. Keep is down a lot. I mean, Keep's been a pretty popular play over the last 2 months. Down with a 24 score, pretty low, but not the worst we've seen in recent time. We got FSN and CHR rounding out the top five. And you can see on the hottest on Twitter, we got Bands taking in number one over there as well. So Sandbox, KNC, I liked it. They liked our tweet today. I was very happy about that. So thank you, KNC. We have AKRO Acropolis, as well as the Loom Network in there, and Haven Protocol, XHV, rounding up top. Now, if you look, you can see Loom Network right there, as well as Nexus Mutual on the hottest on Twitter. 33.9% and 31.65% in positive price action, respectively, over the last 24 hours. So big things happening for those two guys. Nick, we had some news this morning, and definitely some volatile chart action. Care to run through and break it down for the folks on what's going on?
Yeah, so we had some economic data this morning. So actually, it's very interesting in the sense that the data is conflicting in terms of the Fed's end goal, but the market seemed to take it, positively for the most part. Basically, jobless claims came in slightly less than expected. The predicted number was 10K more than last month. It's 2K less. So the Fed is not, softening the job market as they desired. But real GDP, meaning in the real, big air quotes, basically inflation adjusted GDP came in lower than expected. So it was expected to be 0.5% from negative 0.9, and it came in at negative 0.6, which is, less than negative 0.5. That basically means that, GDP took a bit harder of a hit than expected. And so the market kind of rallied in that sense that the Fed may have more to go for their goal, or not more to go for their goal, less to go for their goal, because GDP obviously took that hit. So it's very annoying and confusing economic data. But when you go and look at the charts, this is when the data was released. Well, right here, we zoomed up, we consolidated back, near the low, and we moved higher. So in terms of looking at equities, as long as, the hourly, in my opinion, closes above the VWAP, at least above the POC, the VWAP would definitely be preferred. Equities have a strong chance of moving higher towards 4,200, potentially, maybe 4,218, 4,220, to maybe 4,230 as, for max height, to tag that POC. So when you're looking, this does look to be a bull flag consolidating above support, prices above the 100-day moving average in the hourly, prices above the VWAP, prices above the POC. There's a large gap in liquidity. So it does appear that if we can get, somehow back above 4180, 4182, 83, there's a strong chance that we move higher to 4200. If that's the case, then, based on how we've previously been tracking crypto, we would expect, Bitcoin, and, I know I got a lot of meme lines on here. We would expect Bitcoin to try and reattack that 1 hour 200 moving average at 21.8, which, you know, are some of our community members in the community notated as resistance this morning. Shout out some of our community members. They're picking up very quickly on a lot of the educational material that we're putting out. So 21.8, definitely, maybe 21.75, definitely going to act as resistance if Bitcoin can move higher. What we would look for is very similar to the S&P 500 consolidation, you know, maybe under the 200 moving average, above the POC, above the VWAP, and get a little spring coil and move higher towards 22.2. And then, you know, I think on a high end, a lot of people are looking at that 22.8 number, specifically because it matches with that previous little mini range that we traded before the big nuke last week. If we move over to Ethereum, which we know has been moving a lot stronger in comparison to Bitcoin, obviously, you know, the noticeable difference here compared to Bitcoin is the fact that instead of coiling under the 200 moving average, it's coiling above the 200 day moving average. It's also above the VWAP. It's also above the POC. So Ethereum is kind of in that exact format that you would like for a bullish maneuver. And we're, you know, the goal would be to see Bitcoin reflected, you know, have basically the same kind of pattern, but up here, and then hopefully move higher. You know, and so Ethereum's kind of already showing signs of that kind of life. And, you know, I think, you know, it's probably going to be difficult for it to really move above 1720. But if it does, 1750 is pretty much automatic, maybe 1780, 1800 if we really get some legs under us. Now, the biggest thing to watch out for tomorrow is PCE. Does seem that our overlords are setting us up for potentially a bullish print, meaning it was 0.6% previously month over month. Hopefully it's, you know, they're looking at 0.2% month over month now. If it's at 0.2 or lower, I would expect bullishness, because that would support the inflationist topping narrative. That would support the Fed does not have to continue to front load rates. And then if it's, you know, 0.3% or higher, I would expect probably some bearishness, or at least some extreme volatility in both directions as the market tries to assess whether or not inflation has topped and whether or not the Fed is going to have to take more action. The next Fed meeting is, I believe, in about 4 weeks. So, you know, the Fed said they're going to be data dependent. So if the data supports that inflation is topping, the Fed is obviously going to probably give the market a little bit more relief. If the narrative supports that inflation is not topping, then the market is probably going to experience more downside as they anticipate the Fed may have to take more action. So, you know, very interesting area right now. I think if you are trading, you know, we've been very range bound. I think, you know, personally, I think a bet north over the next 24 hours or maybe 12 to 18 hours is a better bet. But knowing that we have PCE coming up, does, you know, make me weary to have a lot of open interest, take a lot of risk, without kind of seeing how Asia reacts. Because the interesting thing is, if anybody's been watching, you've been waking up and price has been more or less the same price. But if you look at the charts, it sells off after the US close and it gets bought back, you know, late overnight. So it's basically Asia playing a lot of games. And the burgers, as they call us, we're Americans, so we get called burgers. The burgers, you know, have been trading in a very tight range, which is very interesting. So we've been very bored. The fireworks happen after the close, so it could be another day where we're bored again in this range, and then, you know, Asia takes us to have some fun, and then the real fireworks happen around PCE tomorrow.
Yeah, there's been a few things coming out of Jackson Hole regarding the Fed. You know, Doug, you're the everyday guy. What do you think is going on right now as far as what you've been hearing coming out of Jackson Hole with other stuff in the news? You know, I also want to keep on everybody's mind. You know, they're sideways glancing at China right now and their economy, which there's a pocket full of people saying, listen, this China economy is not long for the world and it's going to be systemic. Doug, give us your personal, let's call it from now to the end of the year outlook of what you think may play out.
Well, at least in the next 2 weeks, we're at the slowest part of the year right now. So because people take end of the summer vacation, so it's a tough time of the year to trade or even give some type of investment thesis. So don't really expect much to, you know, after Labor Day. But when I started in this industry, not in crypto, but in financial services 30 years ago, somebody told me to watch the bond market. That's really where the big and the smart money is. So, right now we're at a 1 month high in the 10-year. We're back above 3%. I think that's kind of telling. We have some news today that came out that may not get a lot of press, but the IRS is refunding over $1 billion in tax refunds for people that filed late for COVID. So again, that's stimulus, right? That's money coming into the system. That does a couple things. Maybe it goes to work in the markets, but probably it's just inflationary, right? It probably goes to buy TVs and stupid things because that's what we do as Americans, right? We don't save. So then again, that pushes prices higher. Nick's laughing because if he gets money, he's probably going to buy something stupid. But then we have also the student loan situation, right? They're saying that's inflationary, right? If you don't have to spend $10,000, what are you going to do with that money? Are you going to save it? Are you going to pay down further debt? Or are you going to probably spend that on a vacation? So I think that the markets right now, not much to expect in the next couple of weeks, but it does look like we are setting ourselves up for a crazy fall period. I don't know what Nick's looking for. I think he's looking for downside. I'm probably looking for the same thing, probably a short-term rally into that, and then a lot of chaos, which we've had numerous years in September and in October. So it will be a wild situation. And lastly, everybody was saying housing was immune. The home builders came out a couple of weeks ago, said we're in a housing recession. Now the regular people are saying we're in a housing recession as the existing home sales have slowed down. So that's the last domino in the wealth effect. We've had people lose money in equities, crypto. People start losing sizable money in their real estate, then that's going to certainly cause some pain out there. So.
It wouldn't shock me at all to see us rally post PCE into September. And then something happens in relation to global energy prices because because we've already got the signal that Europe prices are higher. Oil has been moving higher. Russia's now playing a little bit more games since Ukraine has seemingly took some more action in relation to the war. So it would make sense that we could probably get a narrative in September where it's like, okay, the recession's here. We go bear and then we start to recover back into Q4, which could mean equal lows or something like that. Of course, it's very hard to time or to predict, even multi-day, much less multi-week. But if you look at the S&P 500 right now, where it's at, we could, I would not be shocked to see us back at the 1 day 200, the 1 day 200-day moving average. Or we slightly move back up to maybe 44.50, 44.75 before careening back down. Because just where we're at from an economic perspective with the guidance just seems like it's very. I would not expect equal highs anytime soon. I would say equal lows are more likely than equal highs, but it wouldn't shock me to try and move above 50% of this move. To do a nice little bull trap post PC. It's like, oh, inflation's topping, we're good, we're fine. Fed's gonna pivot, blah 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 blah, and then it's like, oh wait, energy just went up another 50%, and then it's like we're right back down. So that's definitely a possibility, especially with China as well. And again, everybody seemingly forgot that Alex, you're on mute. Everyone seemingly forgot that Elon sold, BlackRock CEO sold. A bunch of other people have sold the top. So it's like, people don't sell tops and then just watch prices go higher. Very rarely do the smart money do that. So,
China's the big unknown right now, right? And we have our own problems, but now we're facing existential threat from them, depending on, how bad it gets. And I really don't even have a take on it. You look at different indicators and whatnot. I watch a Graham Stephan, the YouTuber guy, Graham Stephan. I actually like his content. And he put out a show a couple days ago about it. But it's definitely something that should be on everybody's radar. And I'm not even seeing analysts talk about it from the US, in social media or anything like that to any great extent.
So go ahead, Doug. Sorry.
Yeah, I was just going to say that anecdotally, Alex and I know a CIO for a family office for a large bicycle company. This is $1 billion family office, and he's always been interested in crypto and whatnot. And they're not looking at it until at least it goes above 30 on BTC, 30K. And he said other family offices as well. They just have more of a comfort level there than down here. They feel like if we buy down here, maybe it's bottomed, but maybe it hasn't. But at 30K, then they're going to know, okay, Now the trend has changed and we have a comfort level where we can get it from 30 to 50. Does that make any sense? But that's how
No,
people
because it's like I go back to the old adage, like how comfortable were people to buy it at 60,000 and how uncomfortable are they to buy it at 20,000?
exactly.
From a risk aversion perspective, absent fundamentals from a technical perspective, like a 50% retrace confirmation is very sound for that type of investment. And I would assume, I mean, if you think about it, mid 60s to high 10s, it's about even. It's about 50%. So, but also in reference to this rally, I saw some data. This is the highest short covering, I believe, since 2001 in terms of this rally. There wasn't even, or maybe 08 or so 09. Yeah, since 09 and then 01, but it was higher than both in terms of short covering. So a lot of this rally possibly majority of this rally has been short covering rather than I'm going to buy this long term, which would imply, a reversal in trend prior to a what would be considered potentially a legitimate rally. Now, this isn't a legitimate rally. It's just when you look at that kind of data and you're like, we didn't even see that kind of covering in March of 2020 and spring of 2020. Yeah. So, this is literally someone treating it very much like previous economic cycles in which we saw further drawdown after, certain rallies like this, which is something to consider.
As we look at the charts right now, we had some bullish action this morning, which was followed by a sell-off. Now we have kind of a little bit of a reprieve, but not too much. You can see everything pretty much just slightly up for the afternoon. I do want to highlight once again, because today is Thursday, which is Coins on the Move email. So if you're not on our email list, for our newsletters, one of our newsletters is Coins on the Move, goes out every Thursday. You can sign up. It's pinned to the top of the chat here, the live chat. But Chili's, this is the time frame from when we put it on the radar to where it is today. That's a big move. So it was fitting for the newsletter. Another thing I want to get to now is the merge. The merge date is locked in, and it's sooner than we think. It's going to happen. Matter of fact, it's not only sooner than we think, they have an exact time. It's going to happen September 6th at an estimated 7:34 a.m. Eastern Standard Time. And a lot of people have been talking about this. We've covered it in last Monday's market analyst newsletter from Nick. Where, a lot of people playing into this trade, saying this is going to be a difference. We saw a couple pumps over the last, I'd say about 2 weeks ago, when they finished up on the mainnet testing, and it went successfully. We had a nice Ethereum rally, which was outpacing the Bitcoin rally along the same days. But now everything's kind of quieted down. We've slumped a little in the markets. Now we have this merge, which is, if my math is correct, 12 days away. Nick, I'm going to go to you on this. I know you've had very mixed feelings about the merge. What can people expect? Is this a trade that's going to change their life, or is this something that is just going to keep moving along and not make a big difference?
So I think the funniest part about the merge narrative is if you took away the merge narrative and you just lined up the S&P and ETH, they move exactly the same. So, take away all the narratives, everything. ETH was just a high beta asset compared to the S&P.
That's it. So what you're saying is the merge is going to make the S&P jump?
Yeah, exactly. The S&P actually has a high beta to Ethereum. You're right. So that's just the way I look at it. I mean, yes, it makes sense. Yes, there is a deflationary narrative. But I just, in the grand scheme of everything, I think what people are forgetting about is all that crypto is doing is acting as a high beta asset compared to equities. And they should be traded exactly as such. If one has a slightly better narrative, like Atom is supposed to be this, basically the new FTM or AVAX of, ecosystems or whatever, then that makes sense that that's going to move independently and things like that. ETH is, it has not moved independently from what it has a high beta to. Meaning, in my opinion, all narratives are worthless because as long as that relationship stays, it should be traded as such. And given the entire narrative, I'm going to continue to just trade based off of where I believe the S&P 500 and rest of risk are going to go, unless it has a narrative that is so stellar, such as, you know, these low float football tokens or something like that, whatever. But Ethereum is the #2 crypto in the world, and all it did was just move alongside the S&P 500. So that, to me, based on the data that I'm seeing, is just follow the S&P 500 and it will lead you to glory for Ethereum.
Mike,
that's just the easiest way to say it.
Yeah, I was going to ask Nick something differently, which is that the argument against ETH being less efficient, it was slow, transaction fees were high, other chains obviously capitalized it. So with that said, how much of those had those inefficiencies of ETH priced in? And which one of those do you think would be suffering the most risk going forward, assuming the merge is successful and this proof of stake transition makes sense? Obviously, which ones do you think would suffer the most, that had the greatest built-in price appreciation?
Are you talking about which cryptos?
Yeah.
Which cryptos would suffer from a successful ETH
that were
merge?
That were chain based, right?
Are you talking like L1s or just like assets in general?
Right. Yeah.
Yeah.
That were perceived as a better Ethereum, right? Because it had slower.
I would say that if Ethereum does well, it would probably boost all L1s in the short term, just because that's how crypto typically is. The classes like to move in tandem if one is kind of getting a spark. But I think probably what you would look for after that is, you know, then we would start going back to our traditional stats. So right now the market, I feel like, is lasered on, is ETH 2.0 going to be successful? Meaning, like, is it going to operate? Is there going to be consensus? Is it going to fail, etc.? If that is behind us and all the answer is, you know, yes, it's all green, go, I think everything starts to run in that direction, because most chains are proof of stake for the most part. They have smaller delegators and things like that, but operationally kind of the same. So I think a lot of them will run together, and then the market will really start to look at, okay, how many developers are developing? How many updates are happening? What's TVL? How many dApps are being built? What's daily active user base? And then I think that is going to become much more in vogue in terms of how we traditionally look at, you know, similar aspects, and how we were kind of looking at it in the bear market until, you know, all fundamentals flew out the window again. So I think everything will probably pump if it is successful. And then I think you'll begin to see winners really start to creep up and out after the dust settles in relation to traditional success KPIs and success metrics. Because I think, you know, eventually everybody's gonna have to start looking at these things as how much revenue are you producing, how much activity is going on. You know, we have to look at it like applications and like software, you know, eventually. So I have a feeling that post merge that will become much more of a reality, as it's like, okay, these people are actually doing what they said they've had X amount of years, and now we can move in a direction where we're actually giving them, you know, the analysis and the feedback and kind of you know, how we're assessing them, you know, traditionally. So
I think, you know, one of the things I'm keeping an eye out and gonna allocate some dry powder to are the L1s. The L1s, I think, are the peripheral play off of this merge, and I think that's what's going to be really have that short-term boost and pump if this works itself out successful. So, and I believe that's a low risk approach to this bet, but that's how I'm going to trade. I think the L1s are going to be the true winners of this based upon the success. So
typically, yeah, your big air quotes safest crypto bet are the L1s, just because they move in tandem. You know, look at Atom near, you know, some.
Atom, I've been reading a lot on Atom and Cosmos. I want to do a deep dive and really dig into the weeds on that, because I forgot when I share my screen there, Avalanche for texting us. So anyway, no, I agree, but I think Cosmos Atom is actually something that's you know, is something that's actually compelling right now. I'm curious on your thoughts about it. I mean, listen, how did it get put on my radar first? Because we trade on Didex, and Didex uses Starkware. and they are now, which is the equivalent for folks who don't know it, of like a Bitcoin Lightning, but for Ethereum, for instantaneous trades. But they're switching over to Cosmos, which is Atom. So, I mean, I think it's interesting so far.
Yeah, I've slept on it. I'm not a big new ecosystem user, just because like I find them cumbersome, and I find it was just like, I mean, using any new ecosystem to me is like using Ethereum in 2016, 2017. Like, it was not ideal for a more basic user. And I'm like, I mean, I consider myself an intelligent person, but I'm not a programmer. I can get my way. Yeah, I can get my way around the back end of a database and all that stuff, but I need simplicity. And for a lot of those things, there's a lack of simplicity, or there's lagginess, or a fundamental lack of understanding about how the network operates. And that's how, for me, if I don't understand something, I'm not going to be putting thousands and thousands of dollars into it. And if I'm going to be investing and playing in ecosystems, then it's going to be thousands and thousands of dollars. And I find that difficult to just transfer it to a chain and then call that my risk. I just, that's just not how I treat things. So I'll be buying L1s, like Alex said, but rarely will I be splashing in the ecosystems until I see very similar infrastructure to, let's say, MetaMask and Uniswap and things like that.
Agreed. Totally agree with that. All right, moving on. We got Samsung, which is preparing to launch a crypto exchange in South Korea next year. What makes this interesting is they're not the only ones, but we all saw the mobile phone stuff that Solana was doing, opening up stores and whatnot. So Samsung entering this space is a little bit interesting, because we usually think of them as TV makers or other electronics manufacturing. But Samsung is actually one of 7 of South Korea's domestic brokerage firms. This is coming out of Samsung Securities, which is their banking division, that are planning on opening a platform next year. Now, we're in a down market. Everybody has their head down who's operating platforms and building and improving on what they already have. These guys want to come in, break into the space. The interesting thing is, some people may ask why. Well, the one thing that happens all year round is exchanges make money. They execute in volatile low markets. They execute in volatile high markets, and everywhere in between.
And sometimes they stop executing.
And sometimes they stop executing altogether, and poof, they're gone. But the thing is, the money is to be made. I mean, if anybody saw the article from FTX on FTX the other day, FTX came in with over $1 billion in revenue for last year, up from 100 million the year before. So it's truly extraordinary money that these exchanges can make when they operate correctly and don't shut down. Another crypto exchange I wanted to point out is crypto.com. So in CT, I see a lot of people dealing with crypto.com. Obviously, they're famous for taking over the Staples Center naming rights in Los Angeles and spending a ton of marketing money on their growth to where they are today. Now, this article is basically announcing they've become SOC 2 Type 2 compliant. And what does that mean? Well, it's actually really important. And, to go back to TradFi, and Doug will tell you this, we ran traditional hedge fund service provider firm on Wall Street for a number of years. And I'll never forget, I think it was when we got to like 5 billion in assets, we hired a firm to do our SOC test for Type 2 compliance. Man, this thing is like an IRS audit. They have people ripping apart your processes and procedures on everything, on how the controls are with customer funds, to how controls are with data, and everything in between. It took months, and it's only good for a year. So you have to do it every single year. The size that crypto.com is, with the global reach that they have, I'm sure this was a very painful process. And they probably paid well into the 6 figures for this audit. But I will tell you something, things like this are what make me have more comfort where I'm dealing with my money. And I'm pretty sure that Nick and Doug would agree to that as well.
Maybe this is why he told everybody not to worry about anything in the last conference or the last meeting they had, because he's like, oh, don't worry, we're compliant. You'll see. And he
boom, done. And it's actually overseen by the AICPA, which is the governing body of that, and that's the national accounting body. Which is actually like almost like a pseudo FINRA for controls and accounting procedures. They dole out enforcement actions and everything like that. So it's interesting to see that. The last note of news I want to bring up, and this one has me thrown for a little bit. So I want you guys to chime in as best you can. Afghan authorities have shut down 16 crypto exchanges in 1 week. If anybody wants to jump in the comments on this, please do.
Doesn't the Taliban run Afghanistan right now?
Okay, so it's a terrorist organization controlled country. This freaking country has 16 crypto exchanges to shut down in a week. And by the way, I don't know if that's all of them. I don't know if they just shut down all of them. But we're talking about a war-torn country for the last 30 years that has a very impoverished environment, is controlled by a terrorist organization. Can somebody explain to me how Afghanistan has 16 crypto exchanges?
Yeah, I'm sure the word arrest is also very kind in this article as well.
Yeah, I like the headline on the bottom too, citing scams. That's like their biggest concern is scams. Yeah.
It's dumbfounding.
I've got I don't know. There's many words we could say about this situation. I'm gonna take the high road and just say this is very unfortunate for the citizens of Afghanistan, as has the entirety of their past year been. So I'll leave it at that. I think we all understand how sickening that situation is.
Oh, it's terribly sickening. I just wanted to point out that I don't know if you could shut down 16 exchanges in America, but over there you can. Anyway, a piece of odd news. If anybody has insight to the Afghani booming crypto industry, definitely drop us a note. Let us know. We're open to all opportunities. Maybe that's the next move. It's been great in the Caribbean, but I'm sure I've gotten used to the heat.
Yeah, Galaxy is opening up in Afghanistan first. So,
folks, big day for us today. We are having our weekly Thursday Twitter Spaces, and it is with Polygon. We have Justin Havens from their DeFi division of Polygon, and we're excited about this. I mean, we're all going to be on it. It's going to be great. I'm trying to pull up the really nice, like, fancy. Here we go. See, I did that. I just want to say I'm very proud of my artwork. But that is going to be today at 4:30 Eastern time with Justin Havens from Polygon. We're going to talk about Polygon, what's going on their platform, what's building on their platform. We're going to talk about their dominance in DeFi, and then we're going to ask them about other things in the market and have those discussions. We're very interactive. Anybody has questions, you're able to ask these directly yourself. So don't forget to go to Trade the Chain's account at Trade the Chain, and join us at 4:30 for this interactive session. Also, we have another really special crypto protocol coming on with us next Thursday. I'm not going to announce that just because Nick is in charge of the fancy tweets, and I know he likes it to be a shocker. So come join us 4:30 on the Trade the Chain Twitter account. We're talking to Polygon, and it's going to be a great time, folks. So thank you very much from Doug, Nick, myself. We hope you hang on to your handlebars. We'll see you tomorrow and hopefully this evening during Twitter Spaces, guys.